In today's eye-opening episode, we're going to dive deep into one of the most pressing challenges facing real estate investors globally, the intersection of demographic decline, pension system collapse, and the profound implications that this has for property markets worldwide. So we've talked a little bit about countries like Italy and Japan who have seen their populations in decline, and those are also two of the populations or countries where you can find real estate for basically free. And so with a lot of populations around the world also slowing or reversing in many developed nations, real estate investors could be facing a similar transformative landscape. Traditional assumptions about market growth, rental demand, and rental appreciation are being challenged by these demographic shifts. You've got countries like China and India actually below the replacement rate and potentially facing decreasing population. And so it's almost like this idea that capitalism's been like built on population growth.
Right. I was gonna say, what's the replacement rate in the U.S. right now? I was just trying to pull it up. I think it's 1 point
Yeah.
something, 1.6.
Yeah, I think so the US is below the replacement rate. Yeah. Yeah, and I mean, if you look at Europe, we can go through a handful of these things, right? So I think, from Japan's aging crisis to Europe's pension funding gaps, as well as US pension funding gaps, we're talking a little bit about Chicago, which I think they mentioned on the All In podcast. There's these huge pension issues. And this is one of the things that Trump is obviously trying to fix is the entitlement system, because the government doesn't have enough money to pay for all of these things, right? So whether you're
Yeah, like
Go
super
ahead.
simply, we have a number here of what 400 to 500% of the GDP. Major European countries have unfunded pension obligations. So basically, people are expecting these big pensions, and we don't have any money to pay for it.
Yeah, the countries don't have the people to pay for the obligations that they have. And it's not like you can just there's a handful of problems here, right? It's not like you can just stop giving your seniors money, right? Like
Right.
you can't just be like, "Oh yeah, sorry, we were wrong. Like our math was off. Like you're broke now. Like
Good luck.
have fun living the rest of your life in poverty," right?
That's
Like people
right.
were counting on this their entire lives.
Right.
I'm of the opinion personally that people should take care of their own financial future, plan for their own retirement, not depend on the state, etc. But it's too late for me to tell all of those people that, right? And so I also don't think we should just leave them out to dry.
I know I was a full-time firefighter for many years, and that's like when I left, it was especially the older generation, that was you're crazy, you're leaving a pension behind, and I was like, oh man, like I have other things, to help me in this. I don't,
Yeah, yeah,
but a lot of them, that's how they thought, that was their be all end all. It's like nothing else mattered. They had to save $0 because when they retired, they had this pension that was the gravy train for the rest of their lives, and that's how they thought. And yeah, like, I mean, even the stat here I pulled up. So the U.S. population by 2030, 1 in every 5 Americans will be over 65, with birth rates down to 1.62 kids per person in 2023.
yeah.
Crazy.
It's funny, man. Like I was golfing in Palm Springs yesterday, and I'm like looking at all the houses
What's your
around this
handicap?
golf course. Dude, don't even ask me. I don't even know. I don't even know what that my handicap is. Whatever. People who don't even know what that is.
You're like you're shooting over 100, easy.
Now I am. Yeah, yeah. I used to play good golf. Like I was playing 60 rounds a year. Right now I'm playing 0,
Well,
1.
you got kids, I
Kids.
went through
That's
a
it.
big period of, I was a big golfer, like minimum 4 rounds a week. But now I just
Yeah,
got too much shit on my plate again. I went through like a period where I
it's
was,
crazy. Yeah, you think you'd be like you'd have some of it, but no, it's easy to go from like playing in the 80s to over
no, dude,
100, no problem.
especially, yeah. Did you bring your clubs down there? No.
No, I just played it in my father-in-law's bag.
Oh yeah, that's a recipe for
It was good.
disaster right there.
It was
Sorry,
okay,
anyways.
actually. Yeah, it was good. I don't know. I was surprised. It wasn't as bad as I thought it was going to be. I honestly thought I wasn't going to have fun at all. But anyway, I'm looking at all these houses around this golf course. I'm like, who owns these houses? And I'm
Right.
looking, and I'm like, and they're not like they're okay, right? But they're like worth like $1.6 million.
Wow.
And I'm like, who owns all these? And it's all freaking old people, boomers,
Right.
right? And so I think about this a lot in terms of real estate, especially in the US, but also around the world, where, Canada's a really good example as well. Like you've got all of these boomers who have so much real estate wealth. I'm kind of the opinion that governments are incentivized to pump up their real estate asset values through immigration, through M2 money supply. So basically
All right, brother, you gotta give me,
yeah,
yeah, you gotta
that's
go
basically
back.
just like money. That's the amount of money in the economy, right?
M2 money
And
supply.
yeah. And well, so there's M1 that's like money that's given to the banks, and then M2 is a derivative of that. So like that's when the banks basically borrow or create money for you to borrow as like a mortgage, as an example. So, by expanding the money supply, that's how inflation gets created, right? That's really the only thing that creates or destroys inflation is the money supply. So you think back to COVID, the government's basically handing out these like stimulus checks.
Right.
That's an increase in the amount of money is driving the value of assets and goods up. So my thought is, and I'm curious to get your take, but that the governments are incentivized to make asset prices higher because they know that they can't fulfill their obligation to boomers. And the easier way to alleviate some of that burden is to make the boomers asset rich.
Fair enough. Well, I mean, I think we're covering that in another episode, but that one tweet about how many, well, what we do last episode, how many trillion, what's the wealth transfer right now? In the trillions, right?
Mm-hmm.
Not billions, trillions. But I wanted to cover this M1 money supply thing, man, because I can guarantee that my followers don't know what an M1 and an M2 money supply is. I think that's kind of a cool thing. Can I cover this for you?
Yeah, do it.
Okay. M1 money supply is the cash in hand stuff. So it's liquid. It's liquid, easy to spend money. Includes like physical cash, checking accounts, travelers check. Okay. So why it matters. M1 is what people use day to day for buying groceries, paying bills, grabbing coffee. It's the most active money in the economy because you spend it instantly. Okay. So example, if you got $50 in cash and 500 in your checking account, that's 550 of your personal M1 money. Nationally, M1 for the US was around 18.7 trillion in late 2024 as per the Fed data. Okay. Now, no one knew this, dude. You thought people knew this? This is good stuff, man. I've never heard this in my life. All right, M2 money. M2. You know that I'm using this for the rest of my life, though. I am gonna.
Yeah, buddy.
You know how many
You're
arguments
close
I'm gonna
so
win?
many deals talking about M.
Dude, I just got paid. I got a bunch of M1 money coming in, so we're good because it does come in and it gets.
Gonna go lever up and get myself some M.
All right, let me. Sorry, what happened there? All right, now, so we got M1 money comes in, it goes out. All the realtors listening, we only have M1 money, but we're gonna get to M2 money. M2 money supply, okay, is the broader saving. Okay, so M2 includes everything in M1 plus less liquid, harder to spend stuff. So savings accounts. Let's see here. Similar to savings, but bigger balances, often with like check writing options. So small time deposits, certificates of deposit under 100,000 that you can't touch for a set time without a penalty. Let's see why it matters. M2 shows how much money people have stashed away, not just what they're spending. It's a bigger picture of wealth and potential spending power, but it's not as quick to use as an M1. Maybe a dumb question: would M2 be like assets, like real estate?
Well, it's more like the cash side, so like the debt that's used to buy those assets. So if you look at the,
What do you mean?
so it's like so you have cash as your M1, and then M2 is like the not spendable money, like it's attached to something, it's stuck in something, right? So it's like you go buy a mortgage. That's you used money, right? But you can't really do anything other than it being that mortgage, right?
Fair. Okay. So let me explain. So we got one more thing to bring this home for my people. Simple example. Thank you. If you add $2,000 in your savings account to that 550 from M1, your personal, your M2 is 2550. So nationally, the M2 was around 21.5 trillion as in late 2024. So M1 liquidity, M2 is like bigger sums of money for savings and investments, essentially.
And and again, non-cash assets. So like your stocks, I guess real estate probably wouldn't because it's not easily convertible to cash. So you're more liquid stuff. Okay. But if you look at like historic M2 money supply, like just look at that freaking chart, man.
Dude, what website is this?
That's the Federal Reserve.
Obviously.
Yeah. Fred.
Fred.
They name everything. They change everything to like some like they humanize all of their like Fannie, Freddie.
Yeah. I like it.
Yeah. Ginny Mae. They all got these little cutesy names.
I'm really glad we cleared that up because you had me on a panic trying to AI chat what M1 and M2 was so I can keep up here. But dude, I'm pretty much an economist at this point, so let's keep rolling.
Yeah. I think you get an honorary degree now. Yeah, so I mean, the interesting part from my perspective that I think, going back to the conversation about us determining whether or not it's better for you, Dave the firefighter, to invest on your own or trust the pension. it comes back to kind of like the question of why everybody thinks like their home is an investment in Canada, right? So like most of your like buddies that were firefighters probably like they're literally like when they retire, they have their home
Right.
and they have their pension. They don't have anything else,
Right.
literally. So they're and so your home really isn't necessarily an investment. It is for a lot of people because they suck at investing, right? Most people
Right.
like let's take your base human being on earth. They're shit at saving money and they're shit at investing it. Okay.
Right.
So for them, a home is an investment because by committing to a mortgage, they got themselves a savings vehicle.
Right. Right.
And so
Right.
now all of a sudden, they're actually going to save money and they're putting it into an asset, which is a house, right? Real
Right.
estate. But the pension is an interesting one because like had you not bought the house and took all of the down payment and all of those interest payments and put it into something else, you probably could have outperformed the house pretty easily. Had you also taken all of the money that you're paying into your pension, like it's not like it's free money that you know it's your money. Like they're taking money off of your checks that you earn to pay into the pension.
Right.
The so in that regard, your pension would have to be able to outperform you as an investor, right?
Right.
Literally, like the biggest pensions in the world. The problem that they have is they're so big, they have so much money that it's hard for them to generate a meaningful, like big return, right? So like CPP, right? CPP didn't outperform the S&P 500, right? So
Right. Right.
they're spending billions of dollars paying all of these people to manage all of this money, and they can't even outperform the 12 or whatever percent if they had to just put it in an S&P 500 index fund.
Right.
So most historically, many pension funds have struggled to achieve their target returns of 7 or 8%. And to me, going back to what you said, like you have your own investments and stuff like that. That's why I think that people need to get away from that shit, man. If you ever want to win, like if you just want to be the same as everybody else, that's cool, totally fine, whatever. But I don't think most people wake up every day and be like, I just want to be the same as everyone else, right? Right? I don't think so.
No, it's
I
true.
don't, right?
That's because
Or
people
for
are
those who
listening,
don't,
for sure.
yeah. And so if you want better results, you have to do better things, right? And the pension and the house is probably not going to be it for most people, I think.
Interesting. No, I agree honestly 100%. I think, but okay, so maybe we can cover some of the solutions, I know that we don't have the answer, obviously. Well, maybe you do, dude. On one of your website tabs, I'm sure you got some charts about it, but maybe what is the solution here? Like okay, household pension entitlements that are unfunded, that are active. It's like, what's the solution? Because it seems like to me, from my perspective, that this whole issue is going to fall on maybe our generation to kind of foot the bill for this issue that's arising right now, right?
Well, I mean, math would tell you that you're right? Like math would tell you that that like our entire generation will be responsible for footing the bill in the absence of other people to pay. And so a lot of these pension commitments were made on the assumption that population would continue to grow, right? Like capitalism is really predicated on the faith that growth exists and that
Right.
we can continue to grow. And that's just appearing to not be the case. Like what seems to happen in Western economies is, and maybe not just Western economies, but in first world countries, because it happened in China and it's happening in India now, is as people get pulled out of poverty, as they get more educated, they achieve more wealth, or they're living in maybe a more middle class economy, but it's stressful for them to do that. They have to go work and whatever. They don't have kids, right? They have fewer and fewer kids. And so because your replacement rate is falling, and we can go through this list of all of the countries around the world and their pension mismatches, you basically have too few people paying into the pension, right? So you have this like kind of pay as you go system. But so basically pensions are like this pay as you go program, right? So you and I are paying into the system because we're young, we're still working, and somebody else is taking money out of the system. If there's more people taking money out than there's people paying in, then the math would argue that that's going to run into a problem at some point, right?
So, okay, so more people coming into the country, more immigration would lead to more workers, maybe a younger workforce. But we're seeing, and this is honestly, I'm asking you genuinely, because we're seeing tons of immigration to, let's say, Canada, for example.
Yeah.
But I mean, I guess, and Canada is actually in much better shape than a lot of the people on this list, correct?
Yeah. So My guess would be that like what I actually think is the case is I think that governments, they are concerned about a future risk of a demographic collapse putting too much strain on the pension system. I truly believe that this is something that's on their radar, and they are trying to inflate away or inflate the assets. That's it, probably the easiest way, right? Is to cause inflation, to inflate away mine and your debt, right? So if you and I bought a house with a mortgage and then the house goes up in value, our debt relative to the value of that house goes down, right? So you
Right.
make money worth less, you make your debt worth less. Um, so that could be one, because you can do that at the same time as pumping up the boomer asset. So I think governments are probably incentivized to create inflation for that reason. But I think the other one is they're trying to grow their populations to bring in payers into their pension system from other places in the world, right? And you saw this. Canada is the most notable example of this. I have the chart up on the screen right now, but Canada, our population growth was like 4%. It was like the highest in the world for a minute there. The only two places that were growing faster was like Syria, which basically all these people moved back to Syria after the war, and South Sudan, which is like an African country that's way above, it's impoverished and way above the replacement rate from a birth perspective. So read me this list of the top countries whose pension entitlements in social security or in social insurance in the EU and EFTA countries, as a percentage of the GDP, and kind of just give me like, because I think there's a commonality to be found between a lot of them.
This is the one starting with Spain. Yeah. So we got, well, Spain. Okay, let's see here. Unfunded entitlements percent of GDP for Spain is over 500%. Private funded entitlements percentage of GDP is what, like 10%?
Yeah, not even.
Maybe
Yeah, I don't even know. Like
0.4, something like that. Then we got Austria. Austria unfunded entitlements is, let's say, like 480%, where private funded entitlements are about, maybe, I'll give that one 20%, just to be nice. That's generous. Italy's next at, what's that? Over 450 unfunded entitlements, percentage of the GDP. And then you got, same thing, less 10% of private funded entitlements GDP. Netherlands isn't bad. Netherlands was one of the spots. Oh, it's worse.
no, yeah, no, it's good. They're not. It's not good, but it's
Better.
there. Yeah.
Yeah. So we'll say what? So that's 420% unfunded entitlements, and then you got what? 210% private funded. That's not bad. That was number one.
Yeah.
One of the best spots to retire. Am I wrong?
Yeah, I know it was among them. Yeah, and but you look at like Greece and France, like I don't even think they have funded entitlements. Like they're
Zero
literally 100% unfunded, and
unfunded.
that's 400% of their GDP.
Well, that's
So
almost the same for the top list. Like what? Then you got
yeah,
Slovenia, Romania. It's all the same. They're all
yeah,
around
pretty much. Yeah,
400%.
yeah. Yeah, the only
Portugal,
ones that really like stand out as places that are decent would be like Sweden, and then like
Switzerland,
Switzerland and
but
Iceland.
Denmark.
But yeah, Denmark's doing good too. You're right.
Denmark's probably the
So
best.
yeah, it is.
Big chart guy.
You're a huge chart guy. So I mean, to me, this is a bit of a red flag when considering investing in a lot of these markets, right? And you're seeing, I think, them, like a lot of these countries, trying to backfill some of that by growing a population. They can't really grow their economies. European economies are not really in growth mode. The European like stock market actually just returned to its 2008 peak, right?
Wow.
Did you see that chart?
No, I
Yeah.
didn't.
Yeah. So if you bought stocks 25 years ago in Europe, you just got your money back.
What a sick
So
return.
yeah. So beautiful place, right? But like some serious economic challenges for
Right.
that place on earth. And this is it makes you wonder, right? Like was this whole idea of like, the version of capitalism where it relied on growth and relied on people going into the middle class and making them creating a reliance of them on the state, right? On the government to pay for their retirement. And we're doing the same thing in Canada and very much in the US. Was that the right idea? Because now you've got people who, I mean, they aren't working as much, right? The hours that their quality of life's amazing, right? But they're not, not economically productive, and they're having a hard time being globally competitive as a result.
Well, I mean, I think it's maybe coming a little bit anyways, but why don't they just limit the amount of pensions that they're offering, or like Is that
Because
something
they're
that
already committed. I mean, well, like imagine, I
yeah,
don't like, I
initially,
guess I guess the answer to the question is, yeah, I mean, they could limit like future obligations, and that's probably going to be the answer. Like that's probably among the solutions that you're thinking about is they might just say, hey, look, like,
we have no
there's
money.
no, yeah, but in Canada now we have CPP and we have CPP2. So there's actually two, if you make over a certain amount, you actually have to pay a second level of CPP now.
Oh, I
So
didn't
there are
know that.
other questions. Yeah, yeah. So I mean, let's assume that they did that. That still wouldn't solve the problem, right? Like if you just said, Dave and Dan, you guys are young, you're not getting a pension anymore, figure it out on your own, it'd be fine. Yeah, probably a lot of people would be pissed off about that, but
Right,
you know, you can't do that to the existing boomers, and we can't even afford to pay all of our existing pension obligations. So some people, they they conspiracize that the whole pandemic was a there to kill off some of the boomers to reduce the pension obligations, right? Like
yeah.
these are kind of among the scope of solutions that people are really thinking about right now. So I don't know, man. I honestly don't. This is a very, very complex problem to solve. So um, this is one of those things though where I think it is worth, as a real estate investor, looking at the fertility rate in some of the countries that you're investing in, whether or not the economy has potential to grow, or whether or not that economy is in basically demographic decline.
Right,
And because if it's in demographic decline, then probably all of your gains are only ever going to come from inflation, which means the currency eroding in that country. um, but the other piece is like, what is the old age dependency ratio in that country? And that's a key term when you're looking at pension obligations, which is the ratio of people 65 and older, so pension receivers, to the working age population, which is everyone below 65, basically. And that's the burden on the working population to support retirees. Actually, one other strategy that I've seen, well, like France did this, and then there was that um, huge protests, was they tried to move the age up, I think from like 65 to 67. Maybe it wasn't like
for
a huge
retirement.
move. It was either, yeah. So they basically try and make it older before you can get your
Find
pension,
somewhere
right?
to, yeah.
Yeah.
I'm trying to. I'm looking over
So
like the current global fertility rate for some because we got Europe there,
yeah, yeah,
but I'm curious globally.
yeah. I
I
think
have.
there's a global fertility rate.
Let's see. I got like I got like some generalizations in terms of
I think we've had this one up here, but yeah, if you go to like the list of countries by fertility rate in
Africa's
the
the highest,
world, yeah, I mean, look
4.5.
at like, yeah,
India 2.0,
you've got,
and China's at 1.2.
yeah. So basically, the only places above the replacement rate are like basically
Mexico's 2.1.
Africa. Yeah.
Latin America and the Caribbean average is about 2. They have a lot of kids in Mexico. Mexico's 2.1. North America is around, like, US is at 1.62, Canada's at 1.33. I know we've covered this in another episode.
Sorry, it's still fun to cover.
Australia is 1.6. Papua New Guinea is at 3.6, if you're wondering.
Yeah. So like, I mean, really, the only places where you're seeing uh, population growth from um, like are in more impoverished places, right? Places without a middle class, right? Or where you're seeing a disparate, you kind of have like, yeah, poverty,
Yeah.
right?
What's the replacement rate gauge in terms of above average, sufficient, and like extremely low? Do you have that
I
number?
mean,
I have
well,
it.
I think it would just kind of fall at what your replacement rate is, right? Like either like, I mean, the lowest would sort of be like your lower bound, I think, was South Korea, and theirs just started ticking up. They were like 0.6 or 0.7. So
Wow.
basically every couple
Extremely
was
low.
having half a kid, or sorry, yeah, statistically every couple was having one kid, I guess it would have been. Again,
Yep.
statistically, but you can
Below.
spend like this. It feels like this is going to happen in like, well, this is happening in Canada. Like ours is like 1.6, right?
Right.
Like I don't know, like I don't know a lot of like our peers who are having kids, right? Like
Right.
really, tons of them like are just like either they don't want them or they're planning to push it till they're like in their 40s.
Right. Or they're only having one.
Right. Yeah. So I think that this is one of those complex issues where, this is like the bane of becoming a middle class country, right?
Yeah. Like, okay. So obviously, like North America is shrinking, right? Fewer kids, less.
Or they're bad, like, but it's not, because the population's growing, right? And so why is the
Right.
population growing? Well, because people are moving there, right? People are like, think about all of the illegal immigration to the US,
Right.
right? Think about how many people want to move to the US. Think about how many people want to move to Canada, or did. I mean, they still do, but like Canada has one of the lowest replacement rates in the world.
Right.
Um, China is pretty bad too. South Korea, much of Europe is pretty bad from a fertility rate perspective. Uh, so all like what these countries feel like their job is to do, and this is really supporting their real estate markets in Europe as well, right? Like Europe, you're seeing a lot of migration from Africa because it's very close, right? Like
Right.
geographically close. You're seeing a lot of migration from Africa into Europe. In Canada, it's a little different. We're getting like we had a couple of waves of like a lot of immigration from China. We have a lot of immigration from India now in Canada. But this is how a lot of the countries that we've analyzed on the show as potential places to invest in real estate are growing their economies, growing their populations, growing their real estate markets, their real estate investments. And so you almost have to really, the part that scares me a little is like, do we have to take a step back and be like, is this a whole different world now? When you've got
Right.
places like China and India actually in demographic decline, are we basically like, is the whole world going to look like what we saw happen in Japan or happen in Italy over the last 20 or 30 years? Like now that we don't have more and more people consuming and pushing the value of stuff up.
Right. What was it's Japan, right? Japan's got the crazy, not Japan. What's the place with the crazy houses for sale that we're going to do an
Yeah,
episode?
Japan. Yeah, yeah. We're gonna
Japan.
do. I just I messaged an expert on LinkedIn in hopes that we can get an idea of it. Yeah, yeah.
What is he an expert in?
She is an expert in these in Japanese real estate, but but I want to do a whole episode on those what are they called, Akitas? What was that?
Hmm. Let's
That
get
what
her
it
on
was
the pod, man.
for sure.
Oh,
I think we have some recurring guests. I want to know what's going on. Like I think we're going to do an episode on these the same ones like these $1 houses in Italy, right?
that's right. Yeah, we got same thing with we have Australia coming up, maybe Panama too. But
Yeah. Yeah, Australia is definitely. I think Australia would be number one. We're gonna have a hilarious recurring guest from Australia to. Um, I guess the only other things that may be worth noting here is support ratio, right? Like if you're not getting a pension, you're a supporter of the pension. This is the inverse of the dependency ratio. So this basically measures the number of workers people paying in per retiree.
right.
The
Do
pay
you
as
have
you
that
go
number?
well, it would vary on a country by country basis, right? Like, but you could, and we could probably come up with like an old age dependency ratio by country, to be
Okay.
honest.
I'm gonna work on that.
Yeah, yeah. See if they will come up with it. And then you basically come up with this imbalance for the pay as you go system where pension contributions from workers are insufficient to cover pension payouts. So this is like that Chicago one that we were mentioning. Chicago has like billions of dollars of unfunded pensions, and that's just their municipal government pension, right? Which
Right.
leads to funding shortfalls and potentially either the state has to take on more debt to meet those obligations, which it seems to be the case right now, right? Like that's um, a lot of these states, cities, et cetera, are basically just taking on more and more debt. People are continuing to buy the debt or write the debt. So it's the system's still kind of going. But once you have one who, they can't do that anymore, then I think the whole thing comes crumbling down, right? Like it's sort of pension is kind of basically like a Ponzi scheme
Let
at its
me
base level.
I can go over this pay as you go like pension system thing. So, okay, many countries operate as pay as you go pension systems where current workers contribute funds to current retirees and benefits, and imbalance arises due to demographic shifts, obviously aging populations, declining birth rates. We've talked about this, and economic factors like unemployment. Globally, this is a growing concern, obviously. Let's see, the UN projects that 16% of the world's population will be over 65, up from 9% in 2019, draining the pay as you go system. So let's see here. The OECD reports that the public pension spending in its 38 member countries averaged 8% of GDP in 2020, with projections to rise as populations age. For example, Italy's pay as you go system faces a shortfall due to dependency ratio. So, retirees to workers is over 50%, with pension spending at 16% of the GDP. Wow. Far exceeding worker contributions, around 9% of the GDP from payroll taxes. In France,
So
yeah,
yeah, just to draw the line, like the connection there, it's interesting because Japan also has one of the highest old age dependency ratios, around 50%, meaning there are two working age people for each person age 65 plus. Um, and Italy and Japan both are those countries where you can get a house for like $1, right?
that's
So
right.
maybe there's a maybe there's a correlation or a potential future opportunity for me.
It says here emerging. France also is kind of in a bit of a pickle. But emerging markets in China, the urban pay-as-you-go pension system is under pressure with shrinking workforce due to the one-child policy. And a rising retiree population estimates suggests a shortfall of trillions by 2035 without reforms.
That's not far. Like that 2035 is like 10 years from now, right?
Yeah. I
Like,
can do that.
that's a lot of, yeah, there you go. That's some Dave math, realtor math right there. Um, yeah, yeah, you got 10 fingers, so you're good.
Dude, that's good.
Italy and Germany, notably high ratios above 35%. Then if you look at, again, some of these countries, by contrast, African and Middle Eastern nations have lower ratios, often below 10%. Maybe some more like first world ones like the UAE, Qatar, and several, I guess UAE and Qatar, I think Saudi Arabia as well, have low old age dependency ratios due to having younger populations. They've been having kids, right? Which
Right.
I honestly think a lot of it actually has to do with like the role of religion in
sure.
like the Western world, and like the secularization, people getting away from like a more godless society. Like people don't want to populate the earth with God's children, stuff like that, right? Like it's true. Like
Right.
that's just, I think,
No,
like
I agree.
it shows up, right? I think that's a big part too that you could probably observe between some of those populations. The one thing I did want to touch on here is a Ponzi scheme, because I think pensions are a Ponzi scheme. Ponzi schemes are an investment scam that basically pays existing investors with funds collected from new investors. That's literally what a pension is, right?
Fair enough.
So, like, I mean, the pension funds haven't generated enough profit over their lifetime to actually be able to fund the obligation, and so technically they have to evolve into a Ponzi scheme and take money from me and you, Dave,
Right.
to pay the obligations that they have to our parents, right? So it's
Right.
kind of a mess, man, but it's really evolved into that.
Here's the arguments as to why it's not a Ponzi scheme. All right, just so I can fight you on this.
Yeah.
They're legal and transparent, Dan. The pay-as-you-go pensions are government-run, regulated, openly structured. Ponzi schemes obviously are not. They're backed by taxation and government. Governments can adjust pay-as-you-go systems by raising taxes, cutting benefits, or borrowing to cover shortfalls, aka a Ponzi scheme.
Right.
As I'm reading it, I'm like, wait a minute.
Yeah, wait a sec. No, it's kind of crazy, man. So
it is.
Yeah, I don't know. Like, I mean, like there are, I guess the difference is they are backed by actual assets and government guarantees. Right. But I mean, is that really legit? Like government guarantees are like, I mean, they got like, government guarantees haven't been that good. Like they keep having to borrow money to meet their obligations. I don't, just saying, right? So
that's right.
Yeah, man. I don't know. Anyway, I think this is a good episode. We didn't really touch on that much as to why all of this matters to real estate investors. Why does this matter to real estate investors? So if you're like, again, I think we want to highlight the economic stability and strength and certainty of a lot of these countries. We have historically used Italy and Japan as good examples, but if you've got it basically, basically dozens of countries wanting or like mathematically looking like they're going to become like Italy and Japan,
right?
Then you want to be observant of that. Maybe it'll create opportunity because Italy saw a huge collapse in property values in some of their less desirable markets, right. And so maybe if you're looking to buy property in a less desirable area in Spain or China or whatever, then you just got to wait, right.
No, I think I think you hit. I had a few points, just like obviously demographics drive demand, economic stability, interest rates. Like if the imbalance, it could lead to government intervention. Like higher taxes, borrowing, or spending cuts.
More immigration, right? Like that's been a big one. Like
exactly.
I mean,
same with tax implications too.
That's why Portugal and Spain were doing these golden visa programs, right? Like they were trying to bring capital and growth and jobs into their countries, right. But it just backfired because it worked too well, and it worked too well to attract wealthy people, and it offset the quality of life of their existing residents. So it's like this huge balance of governments basically trying to decide if they want to serve their existing residents or their future residents more. And I think the problem is they're too afraid to just outright say, like, if the Canadian government just said, yo, look, we're broke, we can't pay all of the boomers, and it's going to be a really bad thing, and so we got to bring in a shit ton of people from all over the world to come and start working in this economy. And if you're domestic Canadian, entry-level jobs are basically gone because there's always going to be somebody elsewhere in the world to work cheaper than you, right? Like, really. and live in a first world country and work cheaper than you. And these are the consequences. If they spelled it out like that, I don't know. I feel like you got to be honest with people. I feel like it would be freaking tough. People would be super pissed off, but they'd rather
We're already pissed off
that
though.
than exactly that. And now they feel like they've been lied to, as well as being pissed off because like they weren't told the plan.
Right.
And I mean, if you're a current politician, you could also just blame it like on the past politicians who made those pension commitments 50, 60 years ago, right? Like, it's not like you could be like, hey, it's my fault that the pension system's underfunded. I don't know, man. It's a mess.
No, look, I mean, so basically the whole gist of the episode is when you're looking to buy something globally, look towards markets with younger demographics or less aging population.
Yeah,
Let's go
or
there.
pay attention to countries that are using immigration to solve that problem. Because if you look at what happened in Canada when we opened the floodgates on immigration, house prices went fucking bonzos, man.
Yeah.
And the now I got to put an explicit tag on this episode. Shit, but we can swear.
Two.
Yeah. But the house prices went to the moon. Rents went to the moon. Right.
Right.
The economy became a mess, and there was a lot of civil unrest. People are still pretty angry about it, but so there could be another piece too. Watch how politicians are dealing with this issue.
Right. Interesting. That was a sick episode,
Cool.
to be honest.
Yeah, it was good. I enjoyed this episode. I would listen to this episode for sure.
I would listen to this episode, dude. I think I learned about M1, M2 money, learned about Ponzi schemes. It was a big day for me.
M1, M2, M3 aren't just BMWs for you anymore. You're a next level realtor, man.
I'm all the way to the top now, man. I'm an economist. That's it. I read a chart today. It's a good day.
Couple. Yeah.
I read a couple charts today.
It's good.
No, it was good.
We'll leave it there. If you're listening, please subscribe, like the show, leave us a review, send it to your mom, and send it to your politicians so that we show them that you're watching them. I'm on to you guys.
Just don't send it to the Mexican prime minister for me, so I can stay here. Thanks.
Okay, fair.